Over the last decade, India's eating habits have really changed. We've embraced a whole new way of dining out, all thanks to the huge rise in online food delivery. Now just look at the numbers. Back in 2018, the online food delivery market was worth rupees 100 billion, but by 2023 it had jumped to rupees 600 billion. Now if this trend continues, the market is expected to hit a massive rupees 1.4 to 1.7 trillion by 2028, which translates to a growth rate of 17 to 22%. Now this is being driven by rising incomes, urbanization, and of course shifting lifestyle preferences. But none of this would have been possible without the major players like Zomato, which is already listed, and Swiggy, which just had its grand debut on the stock market. Now today, Swiggy's share listed on the National Stock Exchange opening at rupees 420 per share, a 7.69% premium over its IPO price of rupees 390. But on the very day of its listing, Swiggy received an underperformed rating from Macquarie. So what's next for Swiggy? Let's discuss. Now first, let's break down Swiggy's business model because it's much more than just food delivery. Now Swiggy is essentially a super app with four main offerings. Now first is food delivery. This is where Swiggy started and it's still a core focus for the company, generating most of its revenues. Second is out-of-home consumption, which includes dining out and events. Now third is quick commerce, which is on-demand delivery of groceries and household items. And fourth is platform innovations, which is new initiatives like Swiggy Genie and Swiggy Mini. Now Swiggy is the second largest player in online food delivery in India after Zomato, and Swiggy's Instamart again holds the second spot in quick commerce market after Blinkit. Now Swiggy's reach is impressive, serving food in over 680 cities, and its quick commerce arm Instamart operates in 43 cities as of September 2024. Now the company has also seen steady growth in monthly transacting users and average order value across both its food delivery and quick commerce segments. Now financially, Swiggy has shown strong top-line growth with revenue rising around 40% annually between fiscal year 22 and fiscal year 24. However, Swiggy's path to profitability has its own challenges. They're still dealing with losses while its peer Zomato is profitable and has also seen faster growth rates than Swiggy. Let's dive into what Swiggy brings to the table with its core strengths and the challenges it is facing. So first off, Swiggy's core strengths are pretty impressive. Swiggy has become a household name with strong brand recall across India. Right now, it holds around 43% of the online food delivery market, making it the second largest player in the space. And Swiggy has also used its popularity not just in food delivery, but to also expand it to quick commerce and even online event bookings. Now, quick commerce, by the way, is one of Swiggy's biggest opportunities. It's only about 1% of India's overall grocery retail market right now, but that's what makes it so exciting. It's a huge, untapped growth area for Swiggy's Instamart. Now, there is also a growing increase in disposable income and a growing preference for convenient door-to-door delivery of food and groceries. Now, more people are willing to spend on these services, which gives Swiggy a great opportunity to scale up its business. Now, Swiggy's business model benefits from a strong network effect. The more customers it attracts, the more restaurants and dark stores are encouraged to join. Now, this growing network expands Swiggy's reach and further strengthens customer loyalty. Now, Swiggy's contribution margin in food delivery has also improved significantly from 2.94% in fiscal year 22 to about 6.4% in the latest quarter. Now, even in the quick commerce segment, margins have also improved. So while profitability is still a goal, these margin improvements do show progress. Now let's talk challenges. So while Swiggy is generating strong revenues, converting that to profit is a hurdle they haven't yet cleared. Now, quick commerce is a big growth area, but it's also fiercely competitive. Swiggy isn't the only player going after this space. There are other competitors, including e-commerce giants like Amazon, which are ramping up their presence. So while there's plenty of opportunity, it's going to be a very high competition environment. Now, to conclude, Swiggy's journey shows how much progress it has made in online food delivery and quick commerce. With a strong brand, a broad reach, and the ability to innovate, Swiggy has grabbed a large share of the market and expanded beyond just food delivery. However, Swiggy still faces some big challenges. Profitability is a major issue, with ongoing losses and negative profit margins. And with intense competition in the quick commerce space and the food delivery space, Swiggy will need to keep its costs in check, improve how it operates, and continue improving its margins to grow without losing money. Now, there's huge potential here, but turning that potential into real lasting profits is the true test for Swiggy, and every investor should keep an eye on Swiggy's profitability. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.